yesterday we saw the NSE depreciate slightly, and of course helping to drag that down was Fidelity Bank, which, as we said, was 2% down on the back of larger than expected fall in profits compared to a year earlier. But according to Stanbic IBTC, this was pretty much in line with expectations, wasn't it?
Yes, absolutely. I mean, what we saw was a 26% decline in revenue. It was down to around 14 billion. The PBT and PAT was also down generally. And basically what we've seen is a lot of risk aversion as a result of the obviously bad debt and the high NPL generally across the banking sector. But we believe that generally most of this disappointment has been factored into the price now. What we see, or our expectation is that as they begin to start to have some loan recovery, the stock price should start to pick up.
Mm-hmm. But currently it's trading at a 19% discount. I mean, surely this should represent some kind of a value in the market?
Yes, precisely. We think that over the long term, Fidelity is still a good play. It's still a good hold. It's one of the banks that scaled the CBN the CBN audit exercise successfully. So expectation is that as they begin to have some recovery on their balance sheet, and as they begin to book it as a P&L onto their books, we should see some growth, which should impact the market as a whole.
Mm-hmm. Fidelity made a loan loss provision of 23.5 billion back in June last year and 3.9 billion in December last year. Now, you've said in your assessment that if the bank writes back a quarter of the total provisions for 2009, profit after tax will increase by 6.85 billion naira. You've assigned a 40% probability to this. I mean, how likely is this really to happen?
Yes, we expect that there's a lot of drive to recover most of the loans that have gone bad, and we've started seeing generally across the banking sector a lot of recovery. So we expect that Fidelity should also continue to recover some of these loans, which should impact positively on their balance sheet overall.
Loans and advances expected to grow by 20% according to your report, but deposit growth is only expected to grow by 20%. I mean, how is this going to actually happen?
I mean, as customers generally continue to get more confident in the banking sector, as the crisis start to recede, what we expect is that deposits should generally grow. So the report just outlines our expectation that we should see some growth in customer deposits for the bank.
Right, I just want to move on to some other banks that fell quite a bit yesterday on the NSE All Share Index. AfriBank tumbled 5%, while EcoBank down 4.8%. What was the story there?
I mean, generally, what we're seeing is that for AfriBank is one of the banks that obviously didn't scale the consolidation, the audit hurdle. So a lot of investors are, just cutting their losses and moving on. For EcoBank generally has been up this year. So we've seen some profit takers come in to take some profit on EcoBank. But we think generally there's a lull in the market, and the market should start to rebound from early next week.
Where are you seeing value in the market right now, apart from the banks?
I think generally in the conglomerate sector, the likes of UACN is quite attractive. We've seen the forward PEs and the projected dividend yields are quite attractive. In the building materials, our top picks are BCC and CCNN. And also in the food and beverage, we think Dangote Flour still provides some value, and Nestle as well.
Yesterday we saw the insurance sector down just over 2%, and I wanted to just get your view. We've seen Sanlam coming into the market, but the insurance sector isn't as perhaps as active as, say, Kenya and obviously South Africa.
Yes, in the insurance sector, we've seen two disappointing results, or results that are below expectation. Custodian and Allied didn't pay any dividends for their 2009 financials. I think it was below investors' expectations generally. We've also seen Guarantee Trust Assurance have a significant decline in their profit after tax. And I think that has generally dragged down the insurance industry down. But as we see activities pick up in the stock market, and as we see recovery and growth in the market, this should also impact positively for the insurance sector.